quiet, but there are definitely some stocks that deserve mention. Cement is coming back. So India Cements is up almost about 3.5%. It's had a good run this year. India Cements up about 31%. You have real estate. We'll talk about that in greater detail in a bit. Brigade Enterprises is doing pretty well this morning, up 2.5%. And then something like Devyani International is up about 3%. But good set of numbers from Nykaa. Of course, it's a different issue that the stock has been very bumpy because of the lock-in period ending. But the results were not bad. Revenue was up 7% sequentially in a seasonally weak quarter. In fact, we spoke with the management on the outlook. Listen in to what they had to say.
We're quite pleased with the fashion performance for Q2. Fashion has grown 43% year on year. It does contribute about 26% of the consolidated company's turnover. I think we're furthermore feeling good about the business in the sense that it is continuing to be contribution margin positive with a clear line in sight in terms of profitability. And then lots of other core metrics are looking good, whether it's a much higher average order value, whether it's the expansion of share of our private labels. So overall, feeling that a lot of metrics are headed in the right direction from the fashion business.
Beauty, which is already a mature business, but we are benefiting from margin expansion in beauty because of our size and scale, where we are now in beauty business, taking our warehouses closer to the customers. Earlier, we used to have maybe in 5 regions, we had most of our warehouses, but now we're going in many states, including almost 15 states where we may have our warehouses over medium term. So that is putting us closer to the customer and helping us control our fulfillment costs. We are in a very good place on a beauty business as well as on gross margin expansion due to our service income coming in line with, we're able to drive better service income because of becoming a platform of choice for brands to market on our site.
I think we find a marginal difference in terms of the cost of customer acquisition, but they're pretty neck to neck. What we do find is that there's a difference in obviously the repeat to new behavior on the beauty versus fashion side, with beauty obviously being 5-6 years ahead in terms of the journey. And so therefore the marketing costs on the beauty side, do have the benefit of just having a very strong repeat behavior playing out. But I think what we're feeling pretty good about on the fashion side as well is that now as we're entering, the end of the 3rd year and entering the 4th year of the fashion journey, we're finding that similar sort of repeat behavior is finally starting to kick in. And so, this quarter is the first time we've sort of released the fact that 66% of fashion's revenue is coming from, fashion's GMV is coming from repeat buyers. So we do feel that, again, that similar cost structure that we were able to achieve from the marketing point of view in the beauty side should be within fashion's reach in the near future.